Hey friends, welcome to EKV and this is Vishnu. So in this illustration is regarding evaluation of strategies. So starting towards the illustration, the profit of the year of Push on Limited work out of 12.5% of the capital employed, and the relevant figures are so uh, a company called Push on Limited, and the company needs a return of 12.5% of capital employed every year, and some of the details are given. Details are sales of rupees 5 lakh, direct material 2,50,000, direct labor 1 lakh, variable cost 40,000, capital employed is 4 lakh. Okay, then the other details are the new sales manager who has joined the company recently estimated for the next year profit of about 23% of the capital employed, provided the volume of the sales is increased by 10% and simultaneously there is there is an increase in selling price by 4% and an overall cost reduction in all the element of cost by 2%. Find out the computing in detail the cost and profit of the next year. Whether the proposal of sales manager can be adopted. Moving forward for the next question. Details about the single product marketed by a company are as under. So here they are given selling price of a product is 100 rupees, direct material 60, direct labor 10, variable overhead 10. Number of units sold in the year is 5035. Pursuant to an agreement reached with the employees union, there would be next year a 10% increase in the wages across the board for all the direct engaged production, all of the direct engaged production. So you are required how many more units have to be sold next year to maintain same amount of profit, or number 2, or else by what percentage the selling price has to be increased or raised to maintain such amount of profit. So in the first question they have given some of the details of a product which is manufactured by the company, and the company expect a return of 12.5% and some of the details are given, but a sales manager has recommended another strategy on which they will get 23% of capital return on capital employed. For that the volume will be increased by 10%. Simultaneously there will be an increase in selling price at 4% and overall cost will be reduced by 4%. So going towards the solution, first here they have been given the fixed cost, right? So first we need to compute the fixed cost. Okay, so statement showing computation of fixed cost. First of all, we have sales less profit, that is 4 lakh into 12%, right? Capital employed is 4 lakh and 12.5% is the return, expected return. Therefore, the profit would be 50,000. Direct material is 2,50,000. Direct material is 2,50,000. Direct labor 1 lakh. Then variable cost is 40%. Therefore, the total cost including profit excluding fixed cost is 4,40,000. And the difference is the fixed cost, which is 60,000. 5 lakh minus 4,40,000, which gives 60,000. So we have computed the fixed cost. Now we are going to compute the profit as per the recommendations of the sales manager. So therefore we have taken sales as 5 lakh and there will be an increase in sales by 10%. That is 5 lakh into 110 divided by 100 into 4%. Selling price will be increased by 4%, right? Sales will be increased by 10% and sales price per unit price of the sales will be increased by 4%. 5 lakh into 1.1 or 110 divided by 100 into 1.4 divided by 100, 1.04 or 104 divided by 100. Direct material will reduce by 2%, which means 2,50,000 into 98%. 100 minus 2, which is 98 divided by 100. And direct labor, exactly like direct material, that is 1 lakh is the current price, so 1 lakh into 98 divided by 100. Then variable cost, $40,000, and then we have the total cost, which is 4,20,000 and 410. Then we have the contribution 1,51,580 less fixed cost will be reduced by 2%. That is 58,000, 60,000 into 98 divided by 100, which will give an amount of profit of 92,280. Then when we take the return 92,779 divided by 4 lakh, which will give an amount of 23%. So therefore the scheme suggested by sales manager, which is acceptable. Okay, going ahead with the second problem. Here we have given some of the details of the product has been given. Selling price 100, direct material 60, direct labor 10, and variable cost has been given. Number of units is 5035. Pursuit of that agreement, there will be a 10% increase in wages, and the board of the directors is directly engaged in production. So over here on the second problem we should compute the profit. So selling price less direct material, direct labor and variable cost, and look at the contribution of rupees 19. Here we have written as increase in every variable cost, such as direct labor will be increased by 1.1. Okay, when the direct labor increases, there will be a decrease in contribution by 19 by 1 rupees. Okay, therefore the contribution received on 5035, that is 535 units, will be 20 into 5035, which will give 1,07,000. So the PV ratio will be 0.2. The total contribution of the present level is 1,07,000, which means 20 into 5035 units. Therefore the PV ratio will be 20 divided by 100, which gives the PV ratio of 20%. So in order to achieve or in order to find or compute the amount of quantity required to sell such amount, that is 1,07,000 rupees, we need to divide such contribution with the contribution per unit. Okay, so the contribution per unit is rupees 19. Okay, therefore 1,700,000 divided by 90, which will give 5,300 units. So there is an increase in quantity. The percentage increase if there is no change in quantity. If there is no change in quantity, that is the quantity will remain as 5,035, then what will be the change in selling price to arrive at the same level of profit or same level of contribution. Therefore we have taken X as sales price. So the sale, we need to find the sale price, right? So the contribution by sales into 100, which will give an amount of 20%. So X is the sales price. So X minus total variable cost, which is 81, divided by X is equal to 20%. So when we compute or when we simplify this formula, we will get the revised selling price as 101.25. So when we check this change, or when we compute this change in percentage, formula will be 101.25 minus 100 divided by 100. So the change will be 1%, 1.25%. So in order to arrive at the present profit, the firm needs to change or revise its selling price as 101.25 without changing the quantity. So guys, thanks for watching this video. I hope you were clear and complete clarification regarding this illustration. If you find this video helpful, kindly subscribe.